What is up everybody, Gifford here and welcome back to another stock market video, and today I'm going to be talking about the 6 June stocks that I could be potentially buying. So I wanted to get this video out before the end of the week, but I'm just going to be going over some light technical analysis and some news on these 6 companies. So this video is not really about the fundamentals of each company, as I'm going to try to keep it short, more of a basic technical analysis and some news surrounding these companies. Overall, I think the market is fairly expensive at the moment, so I'm just kind of waiting to see what happens with this whole inflation and where the stock's going to go. Currently it's just still trading sideways. I don't see a lot of good deals at the moment, so we're just going to see how June plays out and see what the news comes out. As always, hit the like button to help the channel out, and if you're interested in investing in what I'm doing here, please subscribe. With that said, let's get on with the video. So the first stock we have is none other than Tattooed Chef, ticker symbol TTCF, and only since the beginning of May the stock has actually run up quite a fair bit, already up now about 38%. So just moving on to TradingView, you can see here that the stock has actually started to shoot up and it's currently at $23, and from here you can see that my buy range is sort of from $17 to $20. So with the stock, I really like it. I've got about 250 shares in them. I'm not going to buy them at the moment because I think it's expensive, but if we just zoom out a little bit, we can see that there's plenty of opportunities to buy into the stock because it's had a historical bounce up and down between these levels at a high at about $28. And just back to Yahoo Finance, we know that the stock has run up a bit because now its market cap is $1.88 billion, and we can see that the PE ratio is now starting to get a little bit high at 37. And one of the things to notice about Tattooed Chef and its recent run is that it's actually a stock that's starting to be shorted quite a bit. So over in MarketBeat, we can see that a lot of people have started to actually short the stock because they think it's overvalued. And over here it reads that the short percent of the float shares is about 30%, so that's quite a big amount. However, for me, I'm just going to put an alarm on and wait for the price to drop. I'm in no hurry to buy because I think this is overvalued right now. Anything can happen in the market and it can come down, so I'm happy to wait. So stock number 2 is none other than Google stock, ticker symbol GOOGL. So just reading here from the graph, we can see that its last 6 months performance, it's actually currently up by about 35%. This is a pretty big rise for a big company like this with a market cap of $1.6 trillion. It's got a PE ratio of 30, so that's getting up there as well. It's got a 52-week high of 2,430, and that's round about the price right now. So over in Simply Wall Street, we can see that they think it's trading at 35.7% below its estimated fair value, and that the earnings are forecasted to grow another 13% per year. It's also grown its earnings over 40% last year, so that's probably why it's risen up so much even for a big company. They're making a lot of money. So having a look at Yahoo over here under statistics tab, just to have a look at some numbers of Google. So one of the key reasons that I've been buying a tiny amount of Google at the moment is we can see the trailing PE is at 33 and that the forward PE is going to be at 26, which means that if the stock price remains about the same of where I'm buying it at, that the earnings are going to be growing in the future. So some other big numbers here is that the profit margin is a healthy 26%, and also the operating margin is at 25.26%. And here is a telling sign that this stock is really stable and really solid, and you're not going to get these big fluctuations that you do with the little stocks, is because it's held by institutions 68.13%, and that is a massive amount. So this is pretty much a safe play for me. I don't have a lot of money in Google. I'm just buying them slowly at this rate, but I think that with their earnings and their revenue that they're going to continue to grow, and this is a safe place to put my money when the stock market is generally going sideways. So just to finish off on this page, we can see under the income statement, the quarterly revenue growth is at 34.4%, which again is pretty massive, and the quarterly earnings growth year on year is 162%. So again, that's pretty impressive. On the bottom line, they've gone and doubled their earnings for the company year on year. So the third stock is Tesla, ticker symbol TSLA. And Tesla stock has been having a rough time, dropping from their all-time highs at the beginning of the year. So this wasn't really surprising to see Tesla run so hot and then people selling out of the stock, and now it's come down to what I think is buying levels. I have bought 1 or 2 shares around this price, but I'm hoping if with uncertainty in the market that it still keeps going down. I do have some money on the side still, just waiting. So back over to TradingView for the Tesla charts. You can see here that it was at all-time highs at $900, and I don't know what this wave is called, but I've added this here into the chart because this really tells me the big downward pressure. It kind of just smooths everything off from the lines here and really tells me where the stock's heading as it comes back up again, and this really helps me with my buying and seeing where the sentiment of the stock goes in the general direction it's going in. So as you can see, I've got my low limit of $540 to $640. So what I'm going to do is, after buying a few here, I'm just going to wait to see what the market does, and if it ends up coming down into these lower 500 levels, I'm going to be buying some more, but if it keeps continuing to run up, well, that's fine. I'm just going to wait in the short term and just see how it goes. I've got about 14 shares and I'm happy with that, so unless it's at a discount, I'm not going to be buying any more. So the fourth stock that I may be looking at is NIO, ticker symbol NIO. And here at TradingView, we can see that NIO had all-time highs at around about $67, and ever since the beginning of the year, it's been trending out as it's lost a lot of momentum and the hype has gone from the stock. And personally, I think NIO right now is overvalued for the amount of cars that they are building. However, they are putting a lot of money into the infrastructure. They've got another, they're building another factory, so all that does take time. I've still got my 100 NIO shares. If you saw my portfolio update, I'm not going to be buying anymore unless it gets ridiculously cheap down here in the mid-20s, but at the moment the stock price is actually holding up pretty well at around about $43 pre-market right now. So the last piece of news that we did have from NIO is that they provided their May 2021 delivery numbers. So we can read here that NIO delivered 6,711 vehicles in May, which is an increase from 95.3% year over year. So they're comparing that 6,000 to last year, 2020, that it's almost grown to twice as much. But as impressive as that number looks, it's not actually very good because that's actually less than what they delivered last month. So if we just move over to my homemade Excel sheet of their deliveries, we can see I've got the 6,700. And the last month, in April, they had 7,000 and then another 7,000 before that in March. And this is very much due to the fact that there is a chip shortage. They don't have enough integrated circuits, ICs, to be able to put into the cars for the cars' computers, and that's causing a big problem, obviously, with the pandemic going on. I don't see a significant rise in NIO's deliveries, but in saying that, even though I'm pretty bullish on NIO's future, a lot of growth has been priced in. Their market cap is pretty massive for the amount of vehicles they make. That's why I'm not going out right now and buying the share price at the mid-40s. I am going to wait if it comes down. I don't think it's going to come down though, because it's a very popular stock. So the fifth stock is Palantir, ticker symbol PLTR. And if you're wondering why I've got a bunch of PS5 pictures on my screen right now, and that's because that's about the amount of money I've lost in Palantir recently. So back to TradingView, and here we can see Palantir hit a all-time high at around about $44, $45 in around the end of January, and ever since then it started declining over the coming months. And in early May it even dropped as low as around about $17. So we can see here that I've set my new buy targets for Palantir, which is fairly low, I know, and of a popular stock, but this is what I believe is my personal own buy targets at $13 and $17. So even though I am bullish on Palantir as a company long term, when I saw the revenue, and I even did a video on Palantir about the earnings, it was just too low for me. That's why I ended up actually selling 66% of my shares. I already knew, regardless of the share price at the time, that I was going to lose money, that it wasn't the company that I wanted to invest in anymore. And sometimes for me, I think that if the plan doesn't work, you just have to get out, and if the conviction is lost there a bit, but I'm happy to sell out if I know I got it wrong, even lose a PlayStation 5 for my troubles, but that's okay. If the stock comes back again, I'm willing to buy it. If not, I'll be happy with the 100 shares that I've left there. So the sixth and best stock that I'm currently buying is A2 Milk, ticker symbol ATM. And here on the chart, its last 6 months, we can see that it's down by almost 50%. So I've already done a full video on A2 Milk, so I'm not going to go over some of the stuff I've already gone there. I'll put the video clip up here and probably the thumbnail of the video if you want to watch that. So A2 Milk's current PE ratio is pretty good at 14, and we can see here that it previously closed at $6.15, and that its 52-week low is $5.42. So we know the stock is pretty speculative, and I covered all that in the video, and pretty much what I'm gambling on, a small amount of my money, is picking the bottom. So we can see it's been declining, but here it started to sort of steady off around the $6 mark, and that's really what I'm gambling on. This is not a very high conviction stock, and really I'm just kind of playing around of how I can pick the bottom with this one. It could really still go wrong with what's happening over in China, but I only got a small amount of money in it, and it's just one of those things for me. It's about learning, trying to pick the bottom, although you shouldn't really time the market, but with this one I'm going to have a bit of fun with. So that is my picks for the month of June, and currently with the market kind of going sideways and the threat of inflation, it's not really doing too much, it's not moving too much for me. There's not a lot of deals on the table, so I'm happy to wait. I'm currently at a good cash position, so if there's any opportunities that presents itself when it becomes a big sell-off day, I'm ready to be there to buy the favorite stocks that I have. So I hope you appreciate me sharing my price targets for those stocks and also my thought process of what I'm going to do this month. And that is enough for this video. Thank you so much for watching. As always, safe investing, and make sure you do your own due diligence in the stocks that you buy. And if you want to hear from me, don't forget to add me on Instagram, as I do a couple of posts there each week. May the gains be with you, and I'll see you on the next one. Goodbye.